How's it going, everybody? Antonio here today on the barbecue with Paul Goranson, who's the CEO of enCore Energy, a US-focused uranium development company that's trying to get into production this year in a later part of 2023. Who's not here today, though, is your financial advisor. This is going to be a conversation that's general and impersonal in nature, and one that does not promise to be factually correct. Everything should be double-checked, but also one that will include a lot of forward-looking statements and basically hopes for the future. So before making any decisions, it is, I guess, in your best interest to consult multiple financial advisors, get multiple professional opinions, and go to read the company's official documents on setter.com, and in the end, make your own decision and carry your own responsibility. That said, enCore Energy, as I was telling you, is a US-focused, soon-to-be uranium producer. They will be using the in-situ recovery method, which is a non-invasive, lower-cost mining method for uranium extraction. I guess mining methods are always for extraction, but the first place that they're doing that is in their South-Texan Rosita mine, which is licensed to produce up to 800,000 pounds of yellow cake per year. Again, hopefully starting in the second quarter of this year. Next to that, enCore owns two more of the, so they own in total 3 of the in total 4 ISR projects in Texas, as they recently bought a project called Alta Mesa, which they hope to be starting up next year, so in 2024. And that one has an operating capacity of up to 1.5 million, so 1.5 million pounds of uranium per year. There's also a bunch of exploration potential with that too. We're probably going to be talking about it. enCore also has the Kingsfield Dome past producing mine, which is also planned to be coming back into production in the next 2 years. And in total, those 3 assets in Texas have a production capacity of 3.6 million pounds of annual production, which the company hopes to be reaching within 3 years, or I guess 2026. Now, that's not everything that enCore has. There's more, okay? There's 3 other projects in the US with a longer-term outlook. There's one in South Dakota, there's one in Wyoming, and there's one in New Mexico. All in all, enCore has nearly almost 120 million pounds of uranium in the ground. So that's 93.4 in measured and indicated in the measured and indicated category of the NI 43-101. There's 25.8 million pounds in the inferred category as well. And their long-term goal is actually an interesting one. They hope to become one of the largest producers of uranium in the US, and they hope to get to 3 million pounds of uranium production per year in the next 3 years, and then to the 5 million pound mark within the next 5 years. That all said, Mr. Goranson, it's time for me to shut up. Thank you so much for investing your time in me. What am I missing here in the overview of your company?
First, thanks for the invite to sit in on this conversation, and I appreciate it. And it'll be good to catch up after the last time we visited. I think you pretty much captured everything pretty good, as from the 50,000 foot level, the high level. You captured it pretty well. I will clarify that the 800,000 pound per year capacity at Rosita is a limit. It's a capacity issue, not a license issue. The license allows us to go higher than that. But that was the only thing I felt that probably I needed to pick up on. I think you captured just a general gist of our strategy and our expectations pretty well. I expect we'll get much more granular in our conversation.
Definitely. Yeah. I mean, things are moving closer and closer. Going from 0 to 5 million pounds of production, though, over 5 years does not sound easy by any definition of the word easy. It sounds ambitious, wouldn't you say?
It is ambitious, but if you want to set goals and targets, you got to set stretch goals. And in order to achieve those to present those opportunities to be able to achieve that goal. So we did set ambitious goals to meet. We think we can meet it with the capacity we have, with what we have in South Texas. Between all the areas where we're going to be operating, we think we can get there. In Texas, we can probably get to that 3 million pound goal pretty quickly. It may not be precisely in 3 years, depending on, we do have some permitting work that has to be done to reach those levels, but they're not outside the realm of possibility. And and then as we add in our production sites from other locations, such as Dewey Burdock in South Dakota and Gas Hills in Wyoming, we'll be pushing that 5 million pounds in 5 years. Again, they are, I would say, I would agree with you, they're ambitious goals, but they're goals that if without having that type of goal, we don't have it forces everybody to strive to those goals within our organization. And obviously, market conditions will determine where we're at on those timelines. But when I say market, that's uranium market conditions. But we feel like we're pretty well set up with the infrastructure, the projects we have, and the status of them that we believe we can meet those ambitious goals, and deliver what we said we're going to do.
When you say licenses, is it like what type of licenses? Is it nothing community related or?
No, not community. So we talk about permits and licenses; they're almost interchangeable. So because we mine uranium, we're producing uranium. We have to have radioactive materials licenses, and that has to be issued from either the state of Texas or in Wyoming from the state of Wyoming, or in South Dakota and New Mexico from the Nuclear Regulatory Commission and out of Washington, D.C. So they have to be issued before we can do any kind of production. And then we have other permits that are related to our ability to inject, to use the ISR process to recover uranium. And those are separate permits either at the federal level, EPA, and at the state level, the various states. And those are pretty straightforward, and but they do take time, and there's always timing risk, because anytime you you do the permitting and licensing, you're putting it in the hands of the government. Now we feel pretty comfortable with the agencies we're working with and meeting our timelines, but that's when I talk about social license is something entirely different. Every jurisdiction, every community we work in has a different expectation with respect to that type of social license. In South Texas, it's mainly focused on economic development and jobs. These are economically depressed areas where bringing in good paying jobs is a benefit. And so the local political leaders, the communities are very supportive of us coming in and becoming a significant contributor to local economies. Elsewhere, there's other things we've talked about in the past, and in Mexico and even in South Dakota, there are other communities, tribal communities, that drive some decisions and policies that we have, more so than I would say in South Texas or in Wyoming. All those factor into our business plan, but really and truly, we really, when you hear me talk about licensing and all that, it's more of a regulatory function, not necessarily a community or a social license function.
When companies make these type of goals, first of all, I like it. I like ambitious goals, obviously, but I also try to push myself to think about what can go wrong or what can be a challenge. And if I can believe what other mining companies in the U.S. have been communicating to me, but also to the market, one of the main challenges right now is finding skilled labor. And you're saying that it's an economically depressed area, so people are looking for jobs. Would that mean that there is not good availability of skilled labor? And like, how are you hiring people right now in this environment?
We're actually not too bad off, and I'll be that's a general statement, but I'll be more specific. So we do struggle to hire technical positions, so engineers, geologists, and even folks who are specialized in various very specific aspects of the business, whether it's a chemist or a position like that. They're fairly they're always hard to find, particularly in today's economy, where we have basically a tendency to want to do remote work and everything else. That creates its own challenges. I will say that we've been very successful in hiring some of those, and the reason why I say that is that we've been hiring people who've worked for me in the past who want to come and work for enCore. So we've been able to bring in experienced geologists, experienced engineers, who are going to be the folks who are actually running the operation, the development activities right now as we speak, and we'll be running the operations as we go along. And we have a good relationship with the local universities, and we're trying to bring in some people right out of college. So we're trying to, I would say the folks who are putting into these positions right now are people who are probably 20 years younger than me. They're from the last wave, but they're the kind of what I see the successor generation. And now I want to build the next generation after them of technical capacity, just like I did back in the mid 2000s when I started working down here during the last run up. I'm trying to build the same type of human resource supply chain, for lack of a better phrase. But we do struggle, getting people who are specifically trained in radiation safety and things like that. That's a very small niche of people, and there's not a lot of local education support for that. So we do often have to go outside the region to find and recruit people, and that gets a little bit more challenging. But we've been successful to this point. Of course, nothing ever stays permanent. We're always in a status of change, but I feel confident on that side. With respect to what I would call craft workers or trade workers, that's the field, the operators, et cetera, we've been all very successful on that. And I have to say, I hand it to the oil field, the cutback in the oil price and the redirection of oil and gas operations have, because keep in mind, South Texas itself is heavily energy. It's a heavy energy producing area, mostly in oil and gas. And what's happened over the last 3 years, as we've seen dramatic changes in energy prices, particularly in oil and gas, a lot of the activities occurring in South Texas, principally for the Eagle Ford Shale and other activities, has shifted out to the Permian Basin out in West Texas. And that means the skilled labor that would be supporting oil and gas has to commute 12 hours each way, basically do remote living in order to have a regular craft job. So we've been able to successfully recruit people who are trained in oil and gas operations to come work for us because of the fact that they get to stay home, close to home. And we pay them a good competitive wage, but the added benefit is that they get to go home every night rather than have to be spending time in basically a campsite, a man camp, out in the middle of West Texas, which if you've been out to middle West Texas, it's there's not a whole lot to see and a whole lot to do out there. So it creates that dynamic. And we've also been able to recruit some former workers for us too as well, which helped bring in some additional folks. So we've been, I'd say from the labor side, the skilled labor side, we've had a pretty good response rate. It may or may not be something that lasts, but so far we've had the ability to fill our openings with good, solid people. Now, if we were to translate that to Wyoming or South Dakota, the employment pool is a lot smaller. The geography where people live and everything else are quite a bit different. And I would say that if we were to immediately start up activities up north in Wyoming or South Dakota, I probably would not be saying the same type of success rates that we see here.
How many people, maybe you can give me the overview of how many people work for you right now, and how many people do you think it's going to take for you to get to the first goal and then to the second goal of, 3 and then 5 million pounds per year?
Right now we're at 64 people, and that's spread. Most of those folks are in Texas. Most of those folks are in the field. I'm trying to limit the amount of overhead we have, but to get to the 2 Texas operations up and running, we'll probably have to add another 40 people to the headcount.
Oh, wow.
Between the 2. Mostly at Alta Mesa, that's just going to be a bigger operation. And then if we were to when we bring in South Dakota, and that could get us to that close to pushing that 3 million pound per year mark, that 40 additional headcount. That doesn't include contractors, which are drilling contractors. Those are long-term contractors. Those would probably be another 70 to 80 headcount as long-term contractors. But the advantage we have is that in-situ recovery is not labor intensive because of the nature of the operation. When we're operating the facility doing yellow cake production, uranium production, and yellow cake packaging, you only have 3 to 4 people on shift at a time. Even though they're working 24 hours a day, rotating shifts, that's all you see on site. Most of the work activity is either on the maintenance side, which is another small crew, 4 to 5 people. But most of it is supporting the drilling and wellfield expansion development areas. And so when you take that 64, bump it up to 40 to 100 people combined between Rosita and Alta Mesa, most of those people are going to be out in the field where the drilling is and building the pipelines and hooking up the wells to get into production. And so they'll be continuously working to add that. And then a portion of those will shift to do reclamation work when we're done working in certain areas also. But that's where most of the headcount is. I would say that if we were look to let's talk about the next leg up, that would be South Dakota and Wyoming. We'd probably be adding another 60 people to each one of those operations. On top of that, another 120 people, and then another 150 contractors overall to sustain that production rate of that additional 2 million pounds per year.
What's that gonna, because you mentioned the overhead here, what's that gonna do to your overhead? Talk to me about what your sort of your G&A is right now. What's that gonna do to your G&A? Because it sounds like it's nearly gonna double it.
All right. Well, the thing is that we'll probably add a few more people in at the corporate level, but not many. That's the beauty of having an experienced team, is that we don't have we've gotten more sophisticated, so I don't have to have as many hands touching things, if that makes any sense to you on the process. So I don't see a big growth in our current G&A we're at right now. Like I said, it may be 1 or 2 headcount. Obviously I'm going to have to strengthen my human resources structure on the admin side, but from a cost accounting, finance, I think we're in pretty good shape right now. And going into the future, from a management structure and oversight, I don't see where we need to add a lot, but I do think that we'll have a heavier human resources burden. So we may see a couple people there. Contract administration going forward is probably something we'll need to add to that too. As we start servicing our production contracts and making, that's going to be something that's going to take a level of importance after that.
Okay. It's because why I'm bringing this up is because I'm just wondering, your cash position as of last reported was 2.5 million. It's probably a little bit less now.
No, it's a little higher than that. We did
Okay.
just do a sale. But if you recall, we did a financing back in 2 financings, one in December and one in February or late January, that closed in mid-February when we bought the Alta Mesa project.
Yep.
And those had additional cash. They left us with a bit more cash in it. So I'd have to look at a presentation, but I think we were close to 10 million US, maybe 11.
Okay.
And so and obviously we're spending cash right now for the well field and putting in well field, but we've got a pretty good handle on it. We think we'll spend another 5 million throughout the rest of the year to get into production, and it will have some additional overhead. But I think that 10 million ish. Keep in mind we have a few more. We just did a uranium sale, which brought in a little bit extra cash. We have a couple more to go the rest of this year, which we expect to bring in some revenue as well. So we think we're going to be in good shape to get into production at Rosita and start producing, as well as getting production started up at Alta Mesa in early 2024.
So what you're saying, it's not reasonable to, when people speculate online forums or whatever it might be, saying, oh, they're going to have to do another capital raise before they can start cash flowing to cover G&A and the further development of the company. You think you can do that with by selling the uranium that you have right now in inventories and your cash position? Is that right?
In general, to get us into production in 2024 production, there may be additional capital needs, but right now, from what we're seeing, we haven't really mapped those out. That would be, I could give you any kind of a hard number, but I feel comfortable with what we got right in front of us. We're in good shape. Notwithstanding any kind of sudden, we're seeing, the price increases, the cost increases we saw last year have moderated dramatically as a result of basically, I would say that we were on the leading edge of all the inflationary pressures. So that means that even though we're seeing higher price costs now, they're not rising at the rate that they were last year. And they're pretty flat. And in some cases, for some materials, we saw the greatest increase. They've gone down significantly since those higher price when we were looking for PVC casing for casing wells. Those costs have gone down dramatically. But I won't say we won't look at there won't be any capital needs. But right now, based on our operating plan, development plan, we don't need additional capital to go and execute what we need to do right now in the field.
Okay. When it comes down to raising capital, though, I've been wondering whether you have I don't want to call it a lifeline because it's not really, but I'm wondering where would the money come from if it had to come? Like, are you actively in talks with institutions, or do you think you're mostly going to be relying on retail, especially with the recent New York Stock Exchange ARCA listing there?
Well, right now we're not really talking to anybody about any financing at the moment. We are doing some marketing with institutions, but that's mainly so people know who we are. We're new on exchange. And so we want to go out and make sure people know who enCore is. They know who a lot of the other uranium producers are, but they don't know us very well. And we want to make sure that they know who we are so that when there's an interest, we want them to be interested in buying our stock and hopefully buy some right off the market to invest directly into it without us, just going right to the market to do that. But we're also, keep in mind, as we've stated in our presentations and in our financials, we do have an active divestment program going on too, to divest some of the non-core assets. So we announced the completion of the nuclear fuels where we divested some properties, and granted we didn't get much in the way of cash for it, but we got marketable security. We'll be getting marketable securities once they complete their reverse takeover by Uravan. But we also sold our Sovieta project, and we've got other projects. We've actually properties that have real value to them that we're looking to market and sell in order to bring in cash into our coffers over this year to sustain our so we don't have to go to the market and raise money. So that's some of the what I would call non-dilutive ways of raising cash. And these are properties that we've acquired through our multiple acquisitions that have substantial resources, but they're conventional properties, which we don't have a uranium mill, and we're focused solely on ISR, or may fit someone else's another company's profile better than us that we could sell and get some real value out of it. So we're focusing on generating cash from that aspect.
It's interesting when you mentioned that you would like institutions to be buying in the open market, because when I look at the SEDI filings, I don't see much insider buying in the open market over recent do I say years? Definitely months, and the price is at 2-year lows now. So is that incentivized? Are there any plans to restart insider buying in the open market, or are you talking about it? What can you tell me about that?
It's always a conversation piece that we have for every board meeting about insider buying. I will say that if you look at our history and our transactional history, when you're an insider, you're typically restricted from buying when you have material information that has not been released to the public. And And so as we've been doing all these transactions over the last 12 months, it's put a real restriction on open. We have very limited windows when we can do buying. And if you go back and look over the last year or last 6 months, at least since the beginning of the year, I can't think of a single day where I was able to do any transactions on the market. And that's strictly because we've got restrictions on what we can do to prevent any kind of insider knowledge driving buying and or selling. And so we've been restricted, but I hope that those restrictions I expect will be coming to an end soon. And I would love to buy some more stock myself personally on the open market. I have a lot of faith in this company, and you're right, we are at historic lows, but I wouldn't even, I'm not worried about the timing on the lows. Even if it was more expensive, I'd still want to do it to show people that how much faith I have in this company. I think there's others as well that would be looking at doing that as well, but I'm not going to vouch for them.
Okay. Fair. So it's not like, you're not saying, oh, I don't want to buy, or it's just that you couldn't. That's a fair point, actually. And I think it's a good thing because oftentimes you would see insiders doing it nonetheless and somehow getting away with it too, which is still weird to me, but it happens. That's your cash position. That's what you have going on right now. What about the rest of what do you have now? Just under 60 million of debt, I guess, that you have for the Alta Mesa. Or do you think you're going to keep paying that back at sort of the 8% interest, or do you think you'll be paying it off quicker once you start cash flowing?
Well, that's when you said about additional cash needs and stuff like that. That's going to factor into. It's not. I tell you what, we've looked at finance, loan, going to banks and everything, and getting financing, et cetera. And I would say that debt is probably the most reasonable debt you're going to get anywhere in the market today. And so and keep in mind it is also convertible as well, so they could convert it their option. I'm not sure that the current market conditions would encourage them to do that. So our intent is to pay it off, and we want to be in, whether it's if the price of uranium goes up suddenly, and keep in mind most of our sales contracts are have a significant tie to the spot market. If the price were to go up suddenly, significantly, that would give us much more free cash, and we definitely would be paying off that loan as fast as we could, rather than waiting the 2 years. And because it's a significant interest payment that we're paying on that 60 million, and I'd rather take those dollars and put them back into the ground and putting it to productive use. Right.
Talking about the Alta Mesa mill, you are paying in total 120 million, if I'm not mistaken. So 60 million you financed at $30, which a share, which is higher than right now. There's a 375 warrant on it, if I'm not mistaken, too.
I believe so. Yeah.
Yeah,
and then you have. Since I've seen the paperwork.
What's that?
Yeah, it's been a while since I've seen the paperwork, but yeah, that sounds about right.
Yeah. Well, it's been about 2 hours for me since I saw it, so I'm almost forgetting it myself. But now that's where it comes. And then you have the rest is financed at that 8% that we just talked about. Some people out there again are saying that you might have overpaid for Alta Mesa, as well as you might have bought it at the wrong time because. And here's the rationale behind it. You tell me why that's not true or why that is true. They're saying you drained your cash position and you added dilution that would take too long to resolve itself by adding by adding value to the company through owning Alta Mesa. What do you say to that type of comment?
Well, everybody is entitled to their opinion and their position. I disagree with what they're saying. Yes, we did have to dilute to get it, but it's an accretive project. It's a big project. And when would be the right time to pay for it? If we waited until the spot price went up to $70 a pound, do you think the price would be 120 million? It'll probably be higher. I think we hit it at the right time. It was a good negotiation between us and Energy Fuels. I know that project very well, as you know, that I worked on it. I developed it. I was out there when we broke ground, and there was nothing but scrub brush, and we put that into production. And I know what that the resources and the property is able to deliver. I think we got a great deal on it, and it's not as good as deal as Energy Fuels got when they acquired it. But again, look at the market conditions back then. It was $18 a pound spot price. Everybody was talking about there was not going to be any new nuclear power plants in 20 years running. And look, fast forward to today, $50 with a real strong, all the market signals are going in the right direction to support higher prices. The price of Alta Mesa is not going to go down. We had to take a chance when we did it. We had the right conditions to make it happen. It was a heavy lift for us. Yes, it was a heavy lift, but I think I believe confidently, it's going to pay off in the short term as well as the long term. And I think that being out there we had our board members out at Alta Mesa last week, and we were out there observing the drilling results, and the drilling results are very exciting for me. And we hope to have some information coming out on that in the near future. But I feel very confident that it gives us a lot of lift when we talk about capacity and everything else. And like I said, I think we hit the timing right. Would I have liked to pay less? Yeah, of course I would have. But it made sense at the time we looked at it, and it still makes sense today. It's got real assets will come into production now. So when you talk about NPV and everything else, throwing all that in, it's got real NPV because it's going to have positive impact on production coming up. And it gives me a whole lot more confidence in our business plan when we talk about 3 million pounds a year, and in 3 years, Alta Mesa is the way we're going to make that happen. And we're not going to be doing things foolishly going forward. But this is, some might say this has been my white whale, but I firmly believe in the project. I believe that we're going to prove to those people who think it was too expensive and dilutive. I think we're going to prove to them that it was the right investment at the right time and the right decision to make.
That's a very good answer, especially considering that for the people watching, that these interviews are not scripted. I don't send any questions up front. I don't know if you saw this coming or not, but it absolutely seems like you know what you're doing there. So thank you for that. It was an interesting acquisition to me. I like that it was in Texas, because it seems like the other assets, when you start looking at South Dakota, Wyoming, New Mexico, they're sort of all over the map of the U.S. south to north. What is the long-term goal with those assets? Like, do you want to? Obviously, you're planning on developing all of them and start production, start cash flowing. So what do you do then? Is that you start cash flowing there and then go looking for M&A based on all those cash flow, or like, would you like to sell some of those assets maybe and look for more consolidation within Texas?
Well, I'd say that when you look at the Texas piece, there's only two companies right now that are really active in South Texas. That's us and another uranium company. I won't promote them, but really the consolidation is basically picking up other properties that we would be additive to our current assets right now. So we know where those targets are, and we're in the process of picking those up. As far as the others, the properties, and so Texas, I think the consolidation will be just adding additional resources, increasing the life, particularly for our Rosita and Kingsville Dome assets. Alta Mesa has a whole lot right in front of it, and I believe that we're going to see a whole lot more additive to that as we begin to stick more drill more holes. And Rosita and Kingsville Dome, there are plenty of other known mineral resource properties are out there that we will look to acquire over the next months to a couple of years to increase those the length of time, the life of those projects, and that way we can get more on a per dollar basis, get more value out of them over time. We still intend to develop the other projects elsewhere, because it's always good to have Texas is a great jurisdiction to work in, but it's good to have multiple locations, even outside of in South Dakota and Wyoming, to be able to feed your contracts. Utilities like that diversity of supply. And so when we go and market our uranium sales, we don't just talk about Texas. When we talk about Texas, this is our pathway to production, but we intend to diversify across jurisdictions as a means to provide reliability of the ability to deliver, having multiple things going on at once. Yes, it's like juggling a lot of apples in the air, but it provides us a good solid foundation for supporting our activities. It also gives us the opportunity to look at other opportunities, whether it's future M&A that's accretive and supports what we're doing right now, or potential expansions too. Wyoming's still got a whole lot of open ground out there that can be picked up that aren't necessarily controlled by our competitors. There's opportunities out there where I know where there's potential. Are we ready to act on it right now? No, because it's kind of far out in the future. But I'm not eliminating anything. The plan is to get us to that production level, but also we're going to continue to look for opportunities that are going to provide additional value to our shareholders, but also value to our business plan. And those are out there. I think we've got a good runway, and this provides us where we don't have to go pick up everything. We pick up what we want, which meets what we want to do. We've got the have-tos already done. And so we're not stranded with one project. We're not, or a project that has a potential risk of never coming on. We have multiple places where we can operate. And that's always been what I see is that's where companies like Cameco has their strength. They have multiple production locations where they can sustain their production profile. I see that as being a positive for us as well. That type of diverse source of production gives us some market strength as well.
Mm. But would you want to stay focused on the US though, or because Cameco has got some JVs outside of Canada too?
Yeah, well, our focus is the U.S. because that's where our properties are, right? That's where we're most familiar. That's our home. Would we look to outside the U.S.? I wouldn't say. It depends on what the opportunity is. Not all jurisdictions are where we necessarily want to do business. I don't think we do well working in Kazakhstan simply because of the structure. We're not big enough to do something like that. In Africa, that's a jurisdiction I'm completely unfamiliar with. I know the projects, but I'm completely unfamiliar with them. So obviously, if the right opportunity came up, we definitely would look at it, and if it made sense, then we maybe something we do. But right now, we're focusing on where we have our specialty, our specialized experience. But we're certainly keeping an open mind on other opportunities. We're not going out. I don't see us going into the Athabasca like some of our competitors have, because there's just everybody's in the Athabasca, and I'm not sure where we see niche where we could fit.
I like the playing around a little bit here. Like, okay, we got this one more company, but I'm not going to promote them. And some of the companies are also indeed like going from Texas to Athabasca. You do have a lot more exploration upside though, if I'm not mistaken, that you got
Yes,
for free. It's not for free, obviously, but with the Alta Mesa purchase, what is it, 200,000? I don't want to get metric system acres wrong. Yeah.
I'm not the conversion. I don't know the hectares conversion, but it's a big. So think about it's probably 2/3 the size of the state of Rhode Island, in the U.S. So it's a big area. It's from one end to the other. It's 65 miles, and as we've shown in our presentation, as you can see in the 43-101, we have multiple targets that we're going after that are of very depth. Some are deeper, some are shallower, that we've got. So if there's a region in Texas that the USGS identified as being prolific with the expectation of up to 350 million pounds of uranium that haven't been discovered yet that are going to be economic. And they identified three significant uranium mineralization zones that occur within this area. And guess what? The Alta Mesa project covers all three of those target zones. And if you look at where it lies within the Texas Mineral Belt, it's right in the heart of it. And so we spread the breadth on one mineral owner, and one surface owner. That if we had to go and try to lease this as traditionally is done, we would have had to been years of negotiation with 50 or 60 or 100 different landowners. This gives us a lot of opportunity. And the other part is that a lot of the resources have already been identified. And in the case of the one particular target, we identified 52 miles of roll fronts on stacked, and only drilled out roughly 2 miles of that gave us measured or indicated resources. So there's a lot of upside opportunity out there, and I just see a big future. And it's also because I mentioned the size of the property, we actually have some portions of that property are actually closer in road miles to Rosita and Kingsville than they are to Alta Mesa. So there's some creative value there too, that we could actually bring in and get more benefit out of the capital or assets elsewhere on that same property. So as you would expect, I'm pretty much evangelizing on the fact that I'm a firm believer that there's a tremendous amount of upside on Alta Mesa over and above what we've identified so far.
I mean, why? I guess that's what I'm trying to ask here. What
I
are
can
you
tell
seeing
you.
that's
So
specifically
why do I believe that? So currently we identified roughly 16 million pounds out there on the area outside of the mining lease. When we started, I worked the project back in 2000, from 2004 to 2010, I was working on the project. It was completely greenfield. No one had ever drilled out there before. And so we used existing data, oil and gas logs. We found prospective areas, and we started sticking holes in the ground. And after about 450 holes spread out over roughly 50,000 of those 200,000 acres, we identified roughly 16 million pounds. And that's on spacings of over a mile apart between fences. So that's a pretty good size range. And we were able to hit resources. And what we've learned at Alta Mesa on the lease side at the plant is that as we begin to increase our drilling density, we find our resources go up, not down. So that's why I'm confident once we start doing some more definitive drilling in those exploration areas, you're actually going to see not only the resource can move from inferred to measured and indicated, but the history is that even though they moved to indicated, you see the actual number overall, the gross number inferred and measured indicated goes up as well, because you're increasing your confidence. And as we drill that confidence goes up, where the roll fronts become more sinuous, they begin to add length and area, and that's why you see the mineralization go up.
Okay.
And so I'm very confident that as we start working out in those areas, we're going to see additional mineralization and also higher confidence and building out projects that we're going to actually be able to produce.
How much money do you want to commit to that?
10 years ago, or 15 years ago, we committed about $5 million. I think that gets us a good start. It's not something we're going to be doing in 2023. Everything's focused on Alta Mesa and Rosita. In 2024, we'll look at our cash position and we feel confident I'm going to be putting some money towards that. It won't be at the $5 million level, but it may be a start to a ramp up of an exploration program.
Okay.
But we need to start identifying those in 2024. Just not ready to do it yet.
And you need to start cash flowing. I guess that would be the most prudent way to go about it.
Mm-hmm.
Well, talking about that actually, how you plan on it? Could you please remind me of sort of what percentage of your future production is already spoken for, I guess, in long-term contracts?
So we have 3.65 million pounds in firm contracts right now, and that's from 2023 through 2030.
Okay.
Of that, there's also out to 2032 is optionality of another 1.35 million pounds of optional there. That doesn't represent the total production. If you go off of what our production plans will be, certainly producing much more. What you're going to see is in the first few years, first 2 to 3 years, those contracts are going to be consuming 100% of our production. That's not a bad thing because they are tied to the spot market. So when the spot market moves up, we're going to be realizing spot market pricing as it goes up. So it's not like we're going to be missing opportunities in the spot. Granted, a portion of the contracts have ceilings or price collars on them. They're still well above today's spot price, those collars, and even some of them have floors that are above or right at or above our today's spot price today. So I feel confident that we'll be able to utilize those to support our production. And the reason why they're important to me and to our company is because they provide a dedicated buyer. If you watch the spot market and you read on it, you'll see that there are days that there are no transactions occur. Even though the spot market's moving, there's no transaction. It's the bidders, the bid ask, it's driving everything. It doesn't necessarily mean that there's reflecting in the actual transaction. And so I've had people ask me about the spot market and what it means. I tell them you have to understand it only represents between 10 to 20% of all the sales that occur in the market. But also, it's not a transparent market at all. I characterize it by saying it's opaque, illiquid, and occult. In other words, there's a bit of mystery to it as well as to who's setting the prices and everything else. And you can't always be predictive. Everything you would say that, well, the price should be going up because of these conditions and all that stuff, and it goes down. Well, why is that? Well, there's other people who have different agendas and different reasons for doing things that make the price go down, whether it's offtake agreements, arbitraging, and everything else. So it feels like sometimes we're fighting an uphill battle, but that's because the market's so small, it's so thinly traded that different business reasons are muting the price movement. And so, but I did make sure we had that spot market element because I know a lot of our investors watch the spot market, and we need to make sure that they understand that we're not we're not limiting our ability to see the upside in the market. In fact, I believe that we've done a good job of showing to our shareholders that we are going to be able to see the spot market, realize the spot market improvements directly in our bottom line.
Now, I know you cannot talk to me about specific contracts, but I suppose this is one of the, as you mentioned, one of the main challenges here too, because figuring out what price to contract at to keep shareholders happy cannot be really easy, right? Because you're trying to run a real business, so you want to have a sort of an insured price, not too volatile. So you want to get good free cash flow as soon as possible. But at the same time, we're in an environment where the spot price should be starting to move. It has started moving up. It's now actually been moving up almost daily for the last couple of days, over a week now. So how should uranium companies go about this in general? Maybe you can talk to me about that, not specifically your contracts, but how do you make a contract in a way that and you're ensuring cash flow and you have exposure to the upside in the spot price?
Well, first of all, what we do is we don't commit 100% of our production to contracts over the life of the project. So that allows us the ability to have material available for sales and opportunistic sales in the spot market, but also allows us to have inventory to be able to move and manage our sales. So that's intentional. So we won't be committing 100% of our production over the long haul to contracts, maybe roughly half. So we have that upside. That upside. We want to make sure that we have a portion of our production that is going to contract, so that we have the ability to realize pricing and sales to support our ongoing company, to keep the company moving. So I will say this: when I do negotiations for spot market for contracts, I don't factor in what I think the shareholders are going to think. I look at it from the business sense. What do I need to assure I get a return? And what do I need to do to assure that I got positive cash flow coming in from those sales overall over the life of the contract, to make sure that I'm returning money back in? Because even though we all believe the narrative, the price is going to go up and it's going to stay up. I'm not doing rocket ship emojis, mind you, but there's always a risk it could go back down. Always a risk. We've seen it happen in the past. I wouldn't say uranium is as cyclical as other commodities, but it does run through cycles. And we've been in times when there's a lot lower prices. I want to be able to be in a position where I committed all this capital and investors' money into what we're doing, is that we're getting some form of a way to get a return on investment. So you're going to see a blend of, maybe there'll be some fixed price contracts, not right now because the spot price is too low to be able to secure fixed price contracts at levels I want to contract at. That's why you see the market element with these price ceilings are well above today's spot market, because I want to be able to realize higher prices. But if I'm doing utilities, I got to make sure that you always have to weigh the market risk versus the risk of not getting the business. And I want to make sure that everything's done in a balance to assure that the business itself is generating cash and sustaining its capital needs without having to go to the market going forward. So I may make decisions on certain contracts and certain sales agreements that may or may not be as exciting for for some of the retail shareholders at that particular time it's done, but it's intended to sustain the business, so we don't have to go back to the well of the shareholders' pockets to sustain the business. Does that make sense to you?
Sure does. Yeah, sure does. That's the challenge that I was mentioning. So, because you say that
it's a true balancing act.
You're mentioning the utilities here. How are you experiencing the contact with them versus, let's say, a couple of years ago? How's their, because it sounds a little bit superficial, but how's their behavior, or how's their approach to the whole conversation?
So I would say that let's go back 5 years, just before I started enCore. I mean, don't call us, we'll call you, was a typical way they would have the response. There wasn't, we can get all the uranium we need from carry trades and from Kazakhstan. Why do we don't need to worry about you. And fast forward to 2 years ago was, well, we may have some needs coming up in the 2027 window or these windows, and we could do some contracting. So again, it's a little bit more equal footing between the supplier and the utility, to now where utilities are strategically changing. Prior to the Ukraine invasion, the utilities were willing to have a blend. They were willing to take a risk on having reliance on uranium coming from Central Asia and from Russia, more than they were from Western sources, because, well, they were always reliable suppliers, et cetera, et cetera, et cetera. Fast forward to today, where Kazatomprom is still trying to find a way to get uranium out of Kazakhstan without having to go through Russia. And they've gotten one delivery successfully delivered. They still have to rely on Russia for most of it. And so you see utilities beginning to shift their contracting from being just about the lowest bidder to being to focusing on diversity, supply diversity. And some have even gone so far as to say that all their future contracts are going to be with North American production, North American and Australian production as a preference over Central Asia and Africa. And that's not because it's because of the fact those two production area sources are driven more by government-run companies, whether it's Chinese, Russian, Kazakh, or Uzbek, government-owned companies, than they are market-related companies. So they're looking to secure their supply from more free market, always Western companies, Western entities to get secure supply chains. And because the reason why they're focusing more on it, because 3 years ago, we didn't know what reactors were going to be running in 10 years or not. And the expectation was the number of reactors going to be running or be declining. That has changed dramatically now, where we're talking about power uprates, life extensions are coming into the lexicon of discussions. And so the utilities are willing to look, they want secure supply into the future. And so they want to see suppliers like us succeed. And so you see less of the RFPs, which are basically price exploration, to more of what do you think you can be delivering in these period of times, and what kind of pricing do you need to support that, and et cetera. And they're more one-off, off-market conversations. And they may amount to something, they may amount to nothing. But I'd say the last two agreements we've done that we've announced have not come through RFPs.
Do you have are you getting a feeling of us potentially going into replacement rate contracting this year? I'm trying to be careful with the words, but what I'm trying to ask here is, are we going into replacement rate contracting in 2023?
I think so. I think that's what I'm hearing is what we're doing. And when you say replacing as old contracts fall off, they're replacing those contracts, right? I want to make sure I'm getting the terminology right. Yes, I that's what I see as happening. And the reason why you're seeing it picking up now is, again, it goes back to the fact that prior to a couple of years ago, no one, there was expectation that a lot of the reactors are going to be shutting down. Thanks to the production tax credit and the Inflation Reduction Act, and also the civilian nuclear tax credit that's looking to sustain Diablo Canyon and possibly bring back Palisades into production, into generation. We've heard from Southern, from Dominion, from Constellation Energy, from other companies that they intend to do life extensions, which wasn't factored into the supply demand scenario. So yes, they need to now start contracting to supply that demand that they didn't think they needed. And then also when they're talking about power uprates, that's more consumption on top of that. So now they're having to have additional supply to account for that, the supply uprate, the power uprates. So yes, I see replacement rate contracts, whatever you want to call it. I see those going on, and then looking for additional supply to cover their additional demand that they did not have built into their Ouija board 2 years ago.
Do you think there's going to come a time for utilities where they will have to pay whatever price the producers tells them to? Because what you've been telling me so far is sort of that the conversation evolved from you having to go after them to them now sort of wanting to be in touch with you. But is there going to be a time in the market where they're actually chasing behind producers?
Some will, not all of them. There will be some utilities that will be chasing it. There are some utilities that plan well enough ahead. They're planning now. A lot of them are buying now for 2028, 2029, 30, 31, 32. That's a bit out there in the window, right? That's 5 years out, starting 5 deliveries in 5 years. Some are living hand to mouth. So when we heard rumors about nuclear plants shutting down if uranium enriched uranium didn't come from Russia last year, those are the companies that are living hand to mouth. And I won't identify who they are. We know generally in the industry who they are, but they basically relied on just-in-time inventory. They will be the ones that will be chasing the price. Right now, they haven't had to, but again, they're chasing the enrichment price. They're chasing the conversion price, which is why they're so elevated so far right now, is because those utilities are chasing those. They haven't started going after uranium yet because they need to secure the enrichment and conversion, because they're concerned that the Russian supply is going to end. And so, but again, I think that once Metropolis Works gets up and running, which is going to be in a couple of months, I think you're going to see a lot more uptick in the interest in uranium over conversion and enrichment, or in conjunction with conversion enrichment. But I think that's what we're going to see. They're going to be what's going to create that demand draw.
Do you think that Oh, they're going to be the ones creating the demand draw, but it seems like there's a lot of noise around the physical funds. And sure, Spot has done a very good job mopping up
Yeah.
the spot market. But now we've got a new physical fund joining. Is that only noise? I mean, as an industry insider, is that very important to you, or is that on the less important side of the spectrum?
Well, they don't drive our day-to-day business, but if they can go and raise the uranium spot price, we love them. You know, I encourage people to always consider them as part of the physical, being active in the physical side. But you know, I don't rely. We've seen how spot was really driving things up, and then they ran out of gas because the overall markets drive down their market cap below their NAV, and so you know, it's kind of hard for them. They're kind of sputtering right now because the fact that their business model worked exactly as it's supposed to. I can tell you that people in the utilities were worried that the spot was going to continue raising the price of uranium up and up and up by buying. But in reality, we know functionally, as the price of uranium goes up, the net asset value goes up dramatically, which may exceed the rate of growth of their market cap, and leave them at a discount to NAV continuously, which is what we see today even. And so it's going to be interesting how this new fund comes in. I understand. I haven't done my due diligence on it, so you probably have done much more work on that than I have. But it's my understanding they have an ability to redeem as well in there to redeem the value of the uranium. And so how that works and factors in, I think it's going to be a good thing no matter what. I think it's going to be a positive influence on the market no matter what. But it's going to be interesting to see how they work, because we know how spot works, but it's going to be interesting to see how they work relative to the way the traditional hedge funds worked in the past, which bought up and held everything with the intention of dumping it all back out when they made their profit, their 20% return or whatever. It's going to be interesting to see how it works, but I think it's going to be a positive influence, and it could create a lot of opportunities. I think one thing that's happened that Spot's helped with is that it's raised the level of acceptance of higher uranium prices by the utilities end users. They're expecting to pay more now. They don't want to pay more, but it gives them the ability to support that when they go to their management to need additional funds to buy uranium. We all know that the price of uranium has a very small impact on the price of electrical generation. But again, it's one of those things that they can control, is how much they spend on uranium. But if factors drive the price up above where their budget, it makes it easier for the buyers to go and justify the additional budget to do it. And so that's why the carry trade's effectively dead. And the fact is that now $50 a pound or $55 a pound, that doesn't blink eyes. Whereas 3 years ago, they would have been shocked to ever have to pay those prices.
Yeah. Oh, for
It's like
sure.
boiling a frog. Think about it. We're cooking frogs right now.
As far as I understand it, that's true for the Swiss fund there. You can, as an investor, redeem your holdings. That would mean they would be selling uranium at whatever price at that moment. But there is like a 1% a 1% spread, if you want, or something along those lines. As far as I understand, which would not incentivize buyers to sell at a lower price, because the minimum investment was something like $100,000, and 1% starts counting up for transaction fees, especially if you're down on those pounds. So it doesn't incentivize people to be selling into an already weak market. That's as far as I understand it. So yeah. But if that's not like the most important development in the market, what do you have your eyes the most on right now? Is it bifurcation of the market?
I see that as becoming the biggest catalyst. And when I say that, I see that once there's some certainty about what the future of Russian supply is into the market, then all of a sudden the bifurcation really sets in. I don't think the market's absorbed the impacts of Kazatomprom's announced discussions with CNNC to sell more uranium to them. But that's a big thing, because everybody's depending on the Kazakh material entering the spot market, when I say everybody, the utilities are, and create that flush. But if it's already committed and not even entering the market, the volume goes down dramatically of new supply, and then it becomes a churn of what's in the market already. I don't think it's been quite factored into the market, but those are some of the things that come out of the bifurcation, right? That wouldn't have happened, very likely wouldn't have happened the way it's being structured now if Kazakhstan didn't have so many problems getting uranium out of Kazakhstan. That probably, and even Cameco extending their contracts with the Chinese as well to have material, their places for their enCore production to go to. Those are factors that really haven't resonated through the market, but I see those as underlying building for a significant catalyst for the buy, and we'll get back to the point, back to where there'll be more higher prices simply because the source of the amount of supply sources have been diminished because of these trade issues that we wouldn't have expected prior to February 2022.
So that's yeah, it does make sense. That's the most important development there, because you have OECD supply that is not growing as quickly as OECD demand is, and that's what you're seeing with Cameco, right? Signing contracts in places where they couldn't before, like Bulgaria, other places in Eastern Europe. That's now turning from non-OECD demand to OECD demand, and nobody really expected that. So that's very interesting to me. Yeah. Well, what's your take on their order book? As far as I could see it last week when they reported earnings, they said that they need to be supplying 26 million pounds of uranium per year over the next 5 years on average. And so their order book is filling up. So that may be going to be a big catalyst, because if it fills up at 32 million pounds, that's sort of their licensed capacity, they will have to be restarting tier 2 assets, and so higher cost assets. Is that also a big catalyst in your opinion?
It's a catalyst. How big, I don't know, but Cameco's always, I used to work for Cameco, and they've always had a strategy to always have basically contract 120% of their production. And going to the spot market to soak up spot material to be able to fill sales agreements and everything else. I see that being something they've always done. It's their strategy. And so when I hear a lot of folks making a lot of discussion about, well, they're going to have to go to the spot market to buy, they're not going to do it in a crazy way. They're going to do it in a very smart way. And I think that it'll create an upward pressure on uranium prices, which to me would indicate that they have a lot of their productions tied to market-linked or hybrid contracts. So where they get a benefit from higher spot prices, and they can use their trading desk to be able to help support prices. They're not going to be paying the highest price out there, but they'll be supporting the floor on the spot price.
Sure. I think I'm all out of questions, or not, but we've been talking for about an hour and 50 minutes.
Yeah, I'm going to have to go. I got to return some phone calls that have come in.
Thank you for being here. Anything else that I forgot to ask you that you were hoping to talk about?
Actually, no, because I think we covered a lot of broad subjects, and I think you did a good job of, I would say, asking a lot of questions I see people ask on Twitter and all that stuff. So I think you did a good job of kind of covering the global discussion around enCore and our plans. I'm not sure what to add other than, I really appreciate everybody being interested in what we do. We're trying to make sure people get to see what we're doing, so that, we don't, we're not necessarily known to be we're not putting out continuous press releases, but we're trying to be active on social media to make sure people know that we're actually doing things that we say we're going to do. And I appreciate this opportunity, because it gives us another way to get our message out, and everybody's patience with this nice long interview.
I absolutely agree with you. I think more companies should be doing more content on social media and letting people know what they're doing and stuff like that. So you're doing a good job. Thanks so much for investing your time in me, sir.
Sure thing. Thank you.